A continuación, Ron Giamarco, Financial Services Information Technology Consulting Partner de EY Américas. María Villaquiran, Financial Crimes Technology Senior Manager de EY Américas. Y André Cavaleiro, Financial Crimes Technology Managing Director para EY Américas, quienes nos presentan la conferencia Optimizing Financial Crimes, Operations and Technology.
Thank you. This is Ron Giamarco, and I'm going to start the presentation. Our contact information is included in the early part of the presentation in case anyone wants to reach out to us. So in my role as the America's Financial Crime Technology Innovation and Managed Services Leader, I have the opportunity to work with many financial institutions, global, as well as many single jurisdiction clients, really all over the world. And we continue to see many of these financial institutions struggle with financial crime compliance, complying with global regulations, local regulations, and they continue to spend more and more organizational resources to meet their regulatory requirements. Today, the costs of AML compliance are still very high. What we see is that operations are getting larger and larger. More people are required to meet the operational challenges and the operational requirements associated with financial crime. And we see that most of the legacy technology that has been deployed to help meet the AML, KYC, sanction screening responsibilities really doesn't work particularly well. It causes many inefficiencies, false positives, really drives a lot of wasted effort. Andre, can you flip to slide 7, please? So what are we seeing and what are we doing as consultants to help our clients address these issues? Realistically, most financial institutions really need to transform 3 aspects of their program. Technology, they really have to look at their financial crime policies, and they have to think about their people model and their processes and procedures. So I'm going to talk a little bit about each. In terms of policy, we really advise and are seeing the leading organizations shift to more of a policy, an integrated risk management policy embedded in operations, where compliance isn't a separate enterprise function, but is really embedded in every critical business function. For example, in the new product approval process, in the onboarding of new customers, in the launch of new markets. And moving from a static compliance function, perhaps where you periodically evaluate the AML risk of a relationship, to a continuous monitoring approach, understanding what your clients do every single day, how the relationship with your financial institution changes, and beginning to build a framework to manage the financial crime risk in a more dynamic fashion. As it relates to people and process, we are seeing many global financial institutions, and certainly in the US, many financial institutions think about alternative staffing models, asking questions like, do I want to hire financial crime operations people in my bank, AML monitoring investigators, analysts, KYC analysts, or am I better off utilizing a third party, a managed services provider or a BPO firm that could take advantage of lower cost operations and better frameworks and technology to deliver these capabilities? Am I leveraging data as much as I need to in order to reduce the amount of manual activity that is performed and really rely on my information systems to perform much of the financial crime operational activity? And lastly, and perhaps most importantly, am I thinking about my technological footprint and what changes I can make to achieve better outcomes faster at a lower cost? We all hear the buzzwords like AI, machine learning, OCR, but do I understand how to utilize these technologies in addition to my legacy technology, to achieve better results, to eliminate manual labor, to help the business and our compliance function make better decisions. Those are really the critical aspects of technology. And am I leveraging a more open ecosystem platform model to drive the change that can quickly be embedded in my organization, as opposed to trying to replace legacy systems that are connected in many, many different places and would be very difficult and expensive to replace. Andre, would you flip one more? So what are we seeing today? In the early days of most financial crime programs, we saw the build out of very simplistic initial control functions, rules-based monitoring, very basic workflow. Information was gathered from clients in a manual fashion by phone, fax, email. And I would say that today we are definitely moving up the sophistication curve as it relates to the application of technology to financial crime challenges. Most of my clients today, if they haven't deployed intelligent automation, artificial intelligence and machine learning, they are thinking about it. They have pilot programs underway. And we specifically, EY, we do this on behalf of many clients. We are really helping them remove lots of inefficiencies and manual labor. We're working with organizations that are cutting their investigative workforce, for example, by 20, 30, 40% as the technology enables work to be performed in a much more automated fashion. In addition, we are seeing many financial institutions really think about managed services. In financial crime, historically, most banks were really hesitant to use a third party for a technology, either software as a service provider or perhaps as a managed services provider as it relates to AML transaction monitoring or sanctions clearing. But today, all over the world, we are seeing some of the largest banks in the world really outsource these functions to service providers that are really better able to manage the workforce, that can train people better, that can invest in a larger portfolio of financial crime compliance operations. And we believe as a firm, sort of the next evolution will be more and more industry collaboration. We already see it in many geographies around the world, but the banking industry, the financial services industry coming together to form information sharing utilities, consortiums, or operating organizations. There are a number of locations in the world, Singapore, Hong Kong, the Scandinavian countries, that have started to create nationwide financial crime utilities that all banks can participate in, and the local regulators help manage the risk. In the US, for example, we strongly believe that the industry utility concept will be very beneficial, but it will take some time because we don't have an effective information sharing framework amongst financial institutions to really enable the full power of a utility. So it will vary geography by geography in many different markets. So I'm going to spend a minute very quickly talking about some of the capabilities that we have built to help our clients and how our clients are thinking about using these technology capabilities. On the left side of the screen here, you will see all of the sort of buzzwords of technology: intelligent automation, OCR, natural language processing. But in essence, these things really don't mean anything unless you create a use case that very specifically helps perform a function that is critical in your financial crime compliance value chain. So what we have built is a platform working with technology partners like Microsoft, with fintech and regtech firms all over the world, to create an open ecosystem microservices platform where our clients can consume capabilities that they need in addition to their internal legacy platform. So really, you can think of it as a consumption-based model to perform certain critical financial crime compliance task force activities. And we're really seeing more and more financial institutions try and implement an ecosystem approach to managing financial crime compliance and applying that ecosystem approach to KYC, transaction monitoring, and your list screening responsibilities. So I'm going to hand this off now to Maria, and she's going to talk about some of the specifics that we are seeing applied to KYC. Maria?
Thank you so much, Ron, for getting us started. I'm very excited to be here today to discuss one of the most relevant topics out there in the market, and that is next-gen KYC. So what does this really mean? It means shifting from a regulatory-driven process to a value proposition. And to do this, we need to change the mindset of organizations towards a more dynamic KYC model. So here in the slide, what you're looking at is where do we really want to go with a dynamic KYC model? There's no perfect playbook that lays out how to handle complex expectations that global regulators have on financial institutions. That's why financial institutions have usually chosen to grow large KYC programs built on legacy technology stacks and supported by hundreds of operational teams, depending obviously on the bank size. Beyond the regulatory burden, customers have been evolving their preferences, all on who they would like to interact with. For example, customers are requiring less personal interaction and more speed and personalization of offerings. And with the rise of non-traditional financial institutions, there are now more ways than ever that customers have access to financial instruments. Banks and traditional financial institutions must really keep pace and maintain flexibility to adapt to an evolving customer need. That's why adopting technology, digital enablers, and seamless process orchestration, there are opportunities to remove operational burden from KYC while still maintaining strong adherence to the regulatory environment. The convergence between evolving regulatory and customer expectations is where opportunities exist to separate from peers and really turn a cost center into a value proposition. So to shift KYC into a winning proposition, the following three challenges must be adhered. We need to engage with changing customer expectations. We need to also understand that there are enhancements to global regulatory expectations and really mitigate the fact that there's a lot of legacy technology platforms. So in this slide, you can see, and I'm going to take you to the roadmap on how it is to build a dynamic KYC model. Andre, do you mind if you go to the next slide, please? Thank you. So with the challenges that I just talked about and the benefits of a KYC dynamic model, now I want to talk more about the roadmap itself to really creating this next gen KYC program. We really want to make sure we support the business and not really get in the way of it. So first, let's talk about orchestration of the process. We really need to make sure institutions have a dynamic platform that can really adjust to policy and workflow and supporting multi-dimensional operational teams. And we want to make sure these platforms are low, no code design portals. We can make sure that business or compliance professionals can really ensure there are quick changes. And we want to talk about connectivity to internal and third-party data sources. Now, a second item to really think about is identifying next best action for your customers. Understanding the difference in customer expectations across the enterprise will really allow for tailored customer journeys. So you would definitely want to make sure you have increased use of omni-channel approaches beyond just retail. You want to self-service KYC requirements through customer portals. We at EY have helped our clients build customer portals and really interact really well with customers. And ensure that we allow the business to communicate the right message, the right offering, and the right level of service at the right time. Very critical. Now let's talk about target customer experience. Financial institutions need to support large jurisdictional customers should review global and regional policies to dynamically generate requirements, really to ensure you reduce customer touch points. You provide customer and relationship managers with transparency into requirements, and you really advance the uses of digital channels. And finally, let's talk about integrating with innovation. We need to adopt technology and analytics throughout the customer lifecycle, end to end, to really ensure that the customer experience is enhanced and also reduce the operational burden. You want to, for example, do automatic sourcing of data to satisfy customer requirements. We do this all the time with public and private sources, extraction of information from customer source documentation. And you also want to use advanced ID verification with facial recognition. So those are some of the main focus points on really understanding how to become how to get to the next gen KYC dynamic model that we really want to get to. Now, if we can turn that to the next slide, Andre, I want to talk specifically about examples on leveraging integrated innovation and technology within a financial institution's processes that we have actually deployed through our clients in multiple ways using the platform that Ron talked about earlier on. So let's talk about artificial intelligence and machine learning. We use this all the time to automatically classify documents, extract information from them, and we really train our models in just 5 to 10 business days. And this just saves a lot of analyst time and reduce a lot of human prone error. But now I really want to hone in very quickly into the smart decisioning factor of supporting customer experience. My presentation has really been centered on a lot of the customer experience, which is why I want to focus on this one. So here's a great use case. Right now, customers are inundated with offers that are not really valuable or even relevant to them. So what have we done as part of EY? We've developed a technology solution to really understand how the next best action for your client will really enhance and empower the customer experience. So one, what we did is we mined data in real time from internal and external sources. This really includes KYC data collected in social media. We combine all that data with predictive analytics. We also combine it with self-learning algorithms and business rules to provide insights to users. And finally, what this allows is that we provide users like relationship managers to really prioritize and arbitrate between decisions to help customers take the next best action, no matter what channel they would like to do. So now I'm going to hand it over to Andre to really discuss more around transaction monitoring and innovation.
Gracias, María. Aquí Andrés Cavaleiro. Gracias por la introducción, Ron. Soy un Managing Director en la oficina de Nueva York. 15 años en el sector de tecnología, prevención y crímenes financieros, de los cuales la mitad en la región de Latinoamérica. Así, por eso la razón de mi oportunidad avanzada. Bueno, en los últimos minutos, la idea sería presentar un poco las cuestiones relacionadas a monitoreo transaccional, uno de los pilares principales de la prevención de blanqueo de capitales. Bueno, voy a empezar con la perspectiva, un panorama actual del mercado. Pasamos a los retos y desafíos. Y por fin, algunos ejemplos de aplicaciones tecnológicas innovadoras con un caso real. ¿Ok? Bueno, seguimos. Bueno, el panorama actual, o sea, los retos son muy similares a los puntos presentados anteriormente. Desde el punto de vista de monitoreo transaccional, yo puedo sacar algunos de ejemplo. Bueno, número uno, siempre existente la presión regulatoria. ¿Ok? Mayores restricciones, nuevas normativas, cambios constantes, nuevos negocios, fintechs, payments, alineamiento internacional son algunos de los factores. El costo elevado, con una combinación de elementos, algunos de los nos comentó ya Ron al principio, pero sistemas tradicionales o desactualizados de configuraciones deficientes, generando un gran volumen de falsos positivos, o sea, alertas y casos que no resultan en investigaciones productivas o sospechosas, procesos ineficientes de elevada intervención manual, con falta de consistencia y alta posibilidad de error humano. ¿Okay? Otro factor importante sería el uso ineficiente de recursos y capitales, o sea, con base en abordajes tradicionales, mucho tiempo en la colecta y preparación de información y falta de atención o foco en las actividades de valor añadido. ¿Okay? Por último, un factor muy importante sería la competencia, o sea, nuevas instituciones a cada día. Los que aplican las innovaciones con mayor eficiencia y mayor eficacia tienen mayor ventaja competitiva. Okay. Bueno, pasamos un poco a algunas cuestiones aquí que voy a cubrir como enfoques innovadores. Básicamente, aquí tenemos algunos ejemplos que pueden resolver algunos de los problemas que comenté anteriormente, pero me gustaría hacer un comentario bastante rápido. Escuchamos muchísimo sobre la cuestión de innovación. Innovación es como un buzzword que se escucha a todo lado. Pero para mí, de forma muy sencilla, innovación es una nueva forma de resolver problemas. ¿Okay? Problemas pueden ser nuevos o antiguos. Conceptos y soluciones pueden ser nuevas o antiguas, pero la forma y la aplicación es lo que importa. ¿Okay? Como nos comentaba Ron al principio, la forma y la solución diseñada tienen más importancia cuando bien aplicada. ¿Okay? Bueno, la más reciente evolución tecnológica con los adventos de Internet, Cloud Computing y Open Source nos permite aplicar conceptos antiguos que en circunstancias anteriores no eran de fácil aplicación. Pero hay también de considerar que en los últimos años han surgido nuevos conceptos, nuevas soluciones que nos ayudan a resolver problemas los cuales anteriormente no teníamos una solución o la solución no era razonable. ¿Okay? Bueno, no quiero ser la persona contra las innovaciones, pero quiero decir que el valor está en la forma, en la estrategia, más que en los conceptos, sean ellos nuevos o antiguos. ¿Okay? Bueno, perdón, hablando un poco más sobre algunos ejemplos. Yo tengo aquí 4 que los seleccioné, que tiene más una lógica con las presentaciones anteriores, pero les voy a agrupar de forma a pasar por puntos y identificar cuáles son los conceptos y aplicaciones antiguas o nuevas. Entonces, si juntamos los dos primeros tópicos, Process Automation y Digitalization, podemos decir que son conceptos antiguos, pero la aplicación de nuevas tecnologías se tornarán más accesibles, menor costo y más eficientes. Automación solamente nació junto con las computadoras, ¿ok? Pero nuevos métodos de robótica e integración hoy en día nos permiten desarrollar soluciones inteligentes y más ágiles. Igual la digitalización es un concepto muy antiguo, pero nuevos métodos y soluciones para procesamiento de imágenes nos resultan en mayor calidad, mejores resultados y mayor eficiencia. Igual podemos hablar de Machine Learning, el concepto de los últimos 50 años. ¿Okay? Este es un concepto muy antiguo, pero con reciente desarrollo de nuevos lenguajes, algoritmos de dominio público y poder de procesamiento nos permiten la aplicación rápida, de bajo costo, para solucionar problemas, soportar toma de decisión, ejecutar análisis predictivo de forma inteligente y ágil. Por último, el Next Gen Data, que lo voy a utilizar con un ejemplo real, se da por la evolución del concepto de base de datos que hoy nos permiten almacenar, procesar volúmenes mayores y formatos desestructurados. Voy a utilizar esta última en combinación con otros elementos y un caso real. ¿Okay? Bueno, paso a la próxima diapositiva. Y aquí tengo, bueno, una solución que yo mismo ayudé a desarrollar hace muchos años, 2008, para una banca minorista de Latinoamérica de una dimensión razonable, o sea, 40 millones de clientes, 60 millones de cuentas, donde la solicitación del cliente era: Andrés, ¿me permite de alguna forma tener una visualización holística para soportar la investigación de casos sospechosos? ¿Okay? Necesito identificar relaciones ocultas. Bueno, la solución desarrollada en 2008 tenían algunos algoritmos de correlación de partes, visualización de redes y conexión entre partes. Pero hace 12, 13 años, el poder computacional era un problema desde el punto de vista de costo. Las cuestiones de storage también tenían un impedimento desde el punto de vista de costo. Y bueno, esos dos elementos en conjunto, como resultado, tenían una performance muy baja. Entonces, para la solución que tenía al lado derecho de la pantalla, bueno, una visión muy sencilla de 2 niveles de distancia desde el punto central, me tardaba de 2 a 3 días para ejecución. Bueno, solucionó el problema, el cliente se quedó contento, pero a cada momento que necesitábamos ejecutar este análisis, me tardaban como 2 o 3 días y yo necesitaba confirmar que eso no impactaba todos los otros procesos de producción, o sea, una pesadilla desde el punto de vista tecnológico. Bueno, pasado 10 años, con el adviento del cloud computing, podemos olvidar las cuestiones relacionadas al poder de procesamiento y también storage. Hoy, con la escalabilidad de los formatos de storage y procesamiento, eso no es más un problema. Y también un segundo elemento con más accesibilidad a tecnologías nuevas como el Graph Database y también cuestiones relacionadas a open source software, tenemos la capacidad de desarrollo mucho más rápido y ágil, de forma confiable bueno, desarrollo ágil. Bueno, como resultado, déjame pasar a la próxima. Como resultado final, hace un par de años, tuvimos una misma solicitación, un banco similar, una banca minorista, alrededor de 25 millones de clientes, 35 millones de cuentas, la misma demanda, la misma solicitación, correlación entre partes, visualización de redes, pero ahora de forma dinámica, con la capacidad de identificación de tendencias. ¿Okay? Bueno, con beneficio tenemos una performance real time, lo que me tardaba de 2 a 3 días, ahora a un clic, a la distancia de un clic. Un costo absolutamente reducido. No necesito más calcular la cantidad de servidores, la cantidad de discos para soportar una enormidad de volumen de información. Tenemos una forma de aplicar este análisis en periodos históricos, aplicar filtros, remover tipos de relación, adicionar tipos de relaciones, hacer análisis de tendencias y aplicar modelos predictivos por encima del análisis gráficas. O sea, en cuestión de 10 años, con todas las nuevas tecnologías disponibles, los resultados son infinitamente superiores a costos infinitamente menores. O sea, cuestiones innovadoras, trabajando para solucionar problemas antiguos, cuestiones innovadoras para solucionar problemas innovadores. Yo creo que estamos casi al punto. Me gustaría dejar algunos minutos al final para preguntas y respuestas. Gracias por la atención.
Hi, everyone. I think there's one question coming in around how long does it take to implement some of these technologies? So I'll just take that and then we'll close it as we have the next session right after us. So for this, it really just depends on exactly what type of technology. We have had very quick technology stood up depending on, we can do things in 2 to 4 weeks, or we can take a phased approach of 4 to 6 to 12 weeks. Obviously, there's technology associated to understanding if we want to do it on cloud-based or if we want to do it on-prem. So we can definitely talk more around what it actually takes to start transforming a lot of the technology enablers that EY has to offer. And we can definitely take that next. Any questions? So feel free to connect with Ron, myself, or Andre. Super excited to make sure to help anybody who's of interest. Okay, thank you so much.